This is our Forex blog for April 25th, 2013. Today's blog will be short. These are our currency indexes. So we basically compare all the dollar pairs and actually create a synthetic chart from it, which gives you a wealth of information. The gray line is the hourly moving average. Underneath it, you want to look for sells. Above it, you want to look for buys. You have the previous day's low dotted green, previous day's low dotted red, previous day's high dotted green. The yellow lines are the point of control. This is where, in this example right here, the yen, this is where most traders have positions yesterday in the yen. And as you scroll over a little bit, you can see that the yen yesterday fell 33 pips. The point of control fell 33 pips yesterday, so it was a down day. So if you see any kind of pattern like a double top right here with the weekly and monthly trend being down, it's a pretty high probability place to sell. You know, double tops, double bottoms, you can spot trend lines. For instance, the dollar's trending down. You can clearly see it had a lot of intensity on the way down. It got less. It made another wave down, which had decent intensity, but not the extreme -80 level, which usually continues. Broke the trend line, and usually counter trend trades work their way back up to, this is the weekly average price or the hourly, or it might find resistance at the previous day's low. But nonetheless, when you see a currency break a trend line, without having these indexes, you can't do that. And guess what? At 9 o'clock, the euro, which could not get above yesterday's point of control, is hovering around, chopping around right here. You can see it pretty much broke a trend line 20 minutes before 9. And so the euro was likely to go down, and you could have sold the euro against whatever currency was strong at the time. Now, we'd rather sell the euro versus maybe one of the other currencies, but I'm just going to illustrate the point of when one currency breaks down, and you got it, I'm sorry, I drew that wrong right there, and the other currency breaks out to the upside, you know, about an hour before, 20 minutes before that. 9 o'clock is an excellent place to sell the euro dollar. It doesn't get any easier than that. It's probably going to go, if one currency is going down and the other one's going up, you're going to tend to get 30 to 50 pips. If one currency is moving up and the other one's going sideways, you'll make probably 10 to 25 pips. You can see at 9 o'clock right here, this one went up, it found resistance here, and this is our perfect oscillator. Typically when you have extremes at the +80 level, you're going to get reversals. And guess what? Reversals, reversals, reversals. So even before 9 o'clock, our individual euro dollar chart, if you had just had the perfect oscillator on there and you see our upper containment bands, this is a great counter trend place, and a lot of times counter trends will stall at the hourly and then try to resume their trend. Once it breaks hourly, it's likely to go another leg down. So if you shorted this up here, or even at 9 when it broke, you know, you can certainly draw a trend line on this. A lot of times I draw trend lines and actually create an alert, and either it can play a sound file, send you an email, send you a text message on your phone, and I have trend lines hooked to automatically execute with the broker I use. Unfortunately, it's a institutional broker that most people don't have big enough accounts for, but nonetheless, trend line breaks are phenomenal, especially if a currency's been going up for 12 to 24 plus hours and you get any kind of reversal signal like this, you know, using our perfect oscillator. But the individual currencies clearly gave a perfect entry here, because for one, the euro, while it might have been going up against the dollar because the dollar was weaker, the euro certainly wasn't strong. It couldn't break these highs. And so when it broke that trend line here, it kind of is a nice little wedge pattern. Let's take a look at the yen right here. Very clear double top. You can see the weekly and monthly trend is down. The second high had slightly less strength than the first time, so the momentum is slowing. If you really wanted to be a little bit safer, instead of just flat out selling the double top, which I tend to do, you might draw your trend line on this. And when it broke right here at 430, what a great place to sell the yen. So basically all you got to do, and I'm going to scroll this back so we can see what it looks like at that time. Hold on one second. I just pushed down this demo trade button right here. And when that's the case, every chart that has the same color on it, when you scroll one back, they all scroll back. So you can kind of get a picture for this. So you could you clearly see the double top, and you had about an hour ahead of time before it dropped. You know that the yen's super weak. You know that the point of control of the yen fell at 33 pips yesterday, so yesterday was a relatively down day. And then, you know, pretty much when it breaks this low right here, which currency is strong? Well, obviously, of these four, the dollar's going down, the euro's going down, the pound is exploding. So you would, at around 4:30, want to buy the pound yen. This is the one that's going to give you the biggest bang for your buck. And you can tell by looking at this currency that it also broke its trend line, and it broke the hourly moving average right here. And you would have probably saw that somewhere, it's hard to guesstimate on a 5-minute bar, somewhere in this zone. Certainly no higher than this. So even if you got in at 152.25, and you can see it's already overbought right here. Anytime it goes up and kind of stalls, I'm going to get out of half my trade here, and typically I will eyeball kind of a trend line there and get out of the second half right here. So I would have got out of the second half here and the first half of this trade here. So it's hard to guesstimate where your entry is in this. But because this bar is so big, let's bring up a range chart. This is anytime volatility is high. Put a 5 pips per bar range chart up, and it lets you see each bar is 5 pips. So if the market's exploding and it goes up 20 pips, you're going to have 4 bars during that time. Okay, so this actually shows you, and it's made from ticks. When that broke that trend line, odds are you got into this trade somewhere in this area here, then it gapped up a little bit more. Typically a good way of getting out of these trades, out of half here, and then when it kind of pulls back, typically I'll put my stop underneath there. I would have got stopped out here, so I would have got out of half my trade here, half here, and typically on a range chart you had to get back in with a re-entry. And then you can, by having a range chart on here, you can draw your fibs off of this move and get an idea where the next fib target is. And you can see it came real close to the first fib area right here, and actually went a few pips past it. And so this is an excellent place to get out of that trade. Typically, as soon as it kind of stalls, I'll get out of half, and I would have expected more out of this one, but the next half right here. So didn't make much more on the second trade. But don't be greedy. Take what the market gives you. Sometimes it's 2 or 3 pips, and sometimes it's 50 to 100 pips. But you can clearly see all kinds of patterns using our range charts. So let's scroll this back and look at all of them. This shows the daily trend and the weekly trend. The Swiss, very weak across the board, went up. Yesterday, the point of control of the Swiss fell 101 pips. Had a false breakout above the hourly right here, and had about an hour, hour and a half to try to go higher. When it breaks down right there, what a great place to sell it. Now obviously the pound was super strong, the Swiss is very weak, so and I'm going to just bring up a 5-minute chart here. Buying the pound Swiss at 4 o'clock, also a very high probability trade, and if you missed it or you got into it maybe a little bit late, you still made a ton of pips. That's about 75 pips right there. And, you probably would have given it a little bit of time to pull back. It's debatable how much you made here, but you certainly didn't lose. By this pullback right here, it's going sideways. You had a chance to get out of this at break even or small win. And when that finally, notice it's not making lower lows. It can't break these low here, and then it breaks out, it finally goes up. And I would have got out of half my trade here and kind of drew my trend line underneath here and got out of the second half here. So in this case, the second, you never know if the trade's going to go a little bit or a lot. So psychologically for me, I just always tend to get out of half when it kind of stalls out or I'm a little unsure, then I'll trail the second half. Sometimes I make nothing on the second half, and other times I make an extra 50 pips. Let's take a look later in the day. You can see the CAD. It broke down underneath the previous day's low, then came back above it. This is one of those trades that I like to do. This is the low that it made yesterday. It's the lowest low it made yesterday. Typically when lows get broken, the market will sell off. In this case, it just kind of went down a little bit. So it had many hours to go lower, and it wasn't able to. You can get into this trade here anticipating a pullback to the previous day's low, the hourly moving average, or the point of control. Notice the point of control went up 8 pips yesterday. So it was a barely small up day yesterday, but it wasn't an up day. So the fact that it couldn't go down today, the daily trend's pretty weak, but the weekly trend's just mildly weak. take a shot at it right here at 8 o'clock. So which currency was reversing or super weak when this broke that trend line right here at 8? You can clearly see that the dollar seems to be going down. So why not sell the dollar CAD a little bit after 8? This is really about as easy as it gets. A little bit after 8. Let's take a look at this chart. First of all, this currency has been underneath the hourly all day, which means the dollar's been weaker than the CAD all day. You have the lows right here. You have a nice little wedge pattern. And so we knew by just looking at this chart, wedge pattern breakouts are very high probability. And you want to draw your fibs from here to get an idea where the fib target is. And I'll do that right now to show you where your profit target is. And very strong or weak currencies tend to go to the 1.618. Our 2.0 white containment band tends to be an area to reverse. You also have the perfect oscillator here and here also showing an extreme. But the key to trading, you get in that trade here, maybe you put your stop right above the high here, it's less than 10 pip. Your risk is very little. This is your first profit target. This is your second profit target. If it goes a little bit past that, you might want to watch a very fast tick chart for any signs of it reversing at a very likely reversal area. You get the hell out. But you can see you made over 20 pips while risking maybe 8. That's the key to trading. 1.5 to 2 times or more bigger wins on average than your losses. And you don't even have to be right half the time. And from looking at the trades of our blogs every day, you'll notice that the methods that we teach are way over 50% winning. So that combined with having 1.5 to 3 times or more bigger wins and losses is the key to how we trade. So if you want to get our software, you can open an account with one of our brokers and get it for free, including the data. The only requirement to get the data for free is trading 10 lots per month. That's 10 standard lots. Most of our traders start out doing mini lots and quickly get up to trading multiple full standard lots per trade because, why waste your time trading mini lots when you know what you're doing?